Salt Lake City investors are moving faster than their lenders in 2026. If you're still waiting on a bank, you've probably already lost the deal. I'm going to walk you through exactly how hard money loans work in Salt Lake City right now, what the terms look like, what lenders like me are actually looking for, how the process works from first call to funded, and how to know if hard money is the right type of funding for your deal. I've been doing this for 17 years, over $550 million in private money loans funded, mostly in Western US, and Utah is home base. This is what I see every week on real deals from real investors in this market. Let's get into it. Here's what's happening in the Salt Lake market right now. The Wasatch Front, Salt Lake, Sandy, Draper, Murray, West Jordan. Deal velocity is high. Average days on market for investor-grade residential properties dropped under 18 days earlier this year. 18 days. That's listing to accepted offer. Now think about what that means for financing. If you're using a bank, you're looking at a 30 to 45 day close. Some take 60. By the time your bank gets back to you, the property is already under contract with someone else. Think about that. The investors winning deals in Salt Lake County are either paying cash or they're using hard money loans. Because the seller doesn't care about your interest rate, the seller cares about certainty. Can you close and when? I talked to an investor last month who lost a property in Mill Creek. Good deal. His offer was actually higher than the one that got accepted. But the other buyer was closing in 8 days with cash. He wasn't using his bank. And the seller, he took the sure thing. That story isn't unusual. I hear some version of it probably every week. And if your financing can't move as fast as the deal, you're not competing, you're probably spectating. What hard money actually is. Let's talk about what hard money actually is. Hard money is asset-based lending. That's the single most important thing to understand. A bank lends based on you, your income, your credit score, your W-2, your tax returns. They're underwriting the borrower. A hard money lender like High West Lending, we're underwriting the deal. The collateral for the loan is that property. And the question isn't what's your credit score? The question is, does this deal make sense? That doesn't mean we don't look at credit. Sometimes we do, but credit isn't the driver behind our loan approvals. I've funded deals for borrowers with a 580 credit score, and I've turned down borrowers with a 780 score because the deal is what matters. Here's what Salt Lake City hard money loan terms look like in 2026. Rates 10 to 13%, points 1 to 3 points at origination. Loan to value with a rental, rehab, or fix and flip, 70% of after repair value. Other properties, 75% of purchase price. Term lengths, 6 to 12 months. Short-term financing, you're in and out. Close timeline, 5 business days for a well-prepared deal. Now, I know what some of you are thinking, 10 to 13%, that's expensive. Let me reframe that. A 7% interest rate from a bank that takes 45 days to close and you lose the deal costs you everything, right? A 12% rate from a lender who closes in 7 days and you flip the property in 5 months, that cost you a few $1,000s and you made money. Over a short term, the dollar difference between 8% and 12% is usually $3,000 to $8,000 on a typical Salt Lake City deal. A failed close, that's your entire deal, lost, gone. So hard money isn't expensive. Losing deals, that's expensive. So you've got a deal in Salt Lake. You want to move fast. What am I actually looking at when you call? Let me walk you through the first 5 minutes of a deal call. Number 1, the asset. Where is it? Salt Lake proper, Sandy, West Valley, Draper, Sugar House? I know the Wasatch Front. I've been lending in the Wasatch Front for 17 plus years. When you tell me the address, I already have a feel for the market, the comps, and the realistic after repair value range. That's the advantage of working with a local lender versus some national platform that's never driven through Salt Lake City. Number 2, the comps. This is where a lot of deals start to fall apart. You tell me the after repair value is $420,000, great. Show me the comps. When did they sell? Same conditions, same age and style, same square footage range. If your comps are over 12 months old, they're not comps, they're ancient history. I need comps from the last 180 days ideally. Number 3, the rehab scope. Do you have a contractor? Do you have a bid? Or are you estimating based on what you saw on a walkthrough? I can tell the difference. Most first-time borrowers, they underestimate their rehab by 15 to 25%. Come to me with a line item scope. Kitchen, 18 grand. Bathroom, 12,000. Flooring, 8,500. I want to see the numbers broken out, not a single line that says rehab, 60,000. Number 4, the exit strategy. Now, this is the most important thing on any deal, and it's one most investors spend the least time on. How are you getting out of this loan? Selling after rehab or refinancing into a conventional or DSCR loan? If it's a sale, what's the timeline? If it's a refinance, have you confirmed you already qualify? Today, not after you close. Today, right? I see this at least twice a month. A borrower plans to refi out of a hard money loan on a rental property, but they haven't confirmed their DSCR on the property. They haven't talked to a DSCR lender. They just assume they'll qualify. And when the loan comes due and the refi isn't happening, they've got a hard money loan with no exit strategy. The rental income isn't enough to support them refinancing into a DSCR loan. That's a trap. So before you call any lender, model your exit strategy under 2 scenarios, sale and refinance. If only one works, fine, just know which one. If neither holds up, the deal isn't a deal. Your exit strategy is not hope. It's the most important number in the deal. Hey, if you're already getting value out of this video, hit the subscribe button. I put out videos every week on hard money lending, deal analysis, and real world investing in the Western US. No fluff, no hype, just what I've learned funding over $500 million in real estate loans. And if you've got a deal right now, Salt Lake or anywhere in the Western US, the link to reach me directly, it's in the description. One call, that's all it takes. All right, so let's keep going. Now you know what I'm looking at as a hard money lender. So here's how to come in prepared. Because the difference between a 48-hour term sheet and a 2-week back and forth is almost always preparation. Not the deal, it's the submission, the loan submission. Here's the checklist. 1, pull your comps before you call. Come with 3 to 5 sold comparables from the last 180 days. Similar condition, post-renovation. If the comps support your after repair value, we're already moving. 2, have a real scope of work. Line items, contractor estimates, not full renovation for about $60K. I've seen 1,000 scope of works. I know what a kitchen costs in Sugar House. I know what a foundation issue runs. When your numbers are realistic, the deal, it moves a lot faster towards closing. Number 3, know your carry cost math. What does it cost you per month to hold this loan? What happens if the timeline extends another 30 to 60 days? If a 1-month delay breaks your deal, the margin probably isn't there. Most investors calculate the upside. The ones who get funded fast calculate the downside too. Number 4, model your exit under 2 scenarios, sale and refinance. Run both. Lenders respect borrowers who've done the stress test. It's the single fastest way to build credibility on a deal phone call with a hard money lender. You do those 4 things in a loan submission, you'll have a term sheet from me in 24 to 48 hours. That's how it works when a borrower comes prepared. Now let me walk you through exactly what happens when you reach out to High West Lending. Step by step, no mystery. Step 1, the call. You call me or you fill out the form on highwestlending.com. Either way, we're going to talk. I want to hear about the deal, the address, the purchase price, the rehab plan, the after repair value, and how you're getting out. That call takes 10 to 20 minutes. Right there on that call, I can tell you whether this is something we'd fund. Not a maybe, a real answer. Because I'm the decision maker. There's no committee. There's no upstream approval. It's me. Step 2, deal review and term sheet. If the deal makes sense, I'll send a letter of intent, also called a term sheet, within 24 to 48 hours. Rate, loan to value, points, term length, close timeline, all laid out, no hidden fees. Step 3, underwriting. Appraisal gets ordered. Not in this house. We're doing broker's price opinions to confirm the value. Step 4, close. 5 to 10 business days from an accepted term sheet to funded. Now that's real. We've done it hundreds and hundreds of times. And you know what slows it down? Incomplete loan submissions, title issues, and responsiveness. If I send you a document request and it takes you 3 days to respond, that's 3 days added to your close timeline. The borrowers who close in 5 days are the ones who respond in hours, not days. Now compare that to a bank. 30 to 60 days, multiple layers of approval, 3 emails just to get a status update. That's not how this should work. And it's not how it works over here at High West Lending. Last thing, hard money isn't for every deal. A good lender tells you when their product fits and when it doesn't. Quick framework, fix and flip in the Salt Lake City Metro? Yes. Textbook use case. Short-term financing, fast close, you're in and out in 4 to 8 months. BRRRR strategy? Strong candidate, but confirm the refinance before you borrow the hard money on the front end. Call your DSCR lender first. Make sure the refi can happen. Bridge acquisition, buying a new home before you sell your current one. Great use case. That's literally what a bridge loan is for. Long-term rental hold. Usually not. Hard money is a bridge, not permanent financing. It's something that you refinance into it with a DSCR loan. New construction, case by case, different conversation than a fix and flip. The rule of thumb is pretty simple. If you need speed, flexibility, and a short-term capital solution for a deal in Salt Lake City, hard money is probably the right tool. If you need a 30-year fixed rate for a property you're holding forever, it's definitely not. Know what you're using the hard money for and know how you're getting out of the loan. That's how hard money works in Salt Lake City in 2026. No mystery, no fluff. The market is fast, and the investors who win are the ones whose hard money lenders like me can keep up. If you've got a deal in Salt Lake or anywhere in the Western US, reach out to us directly. One call, one decision, no appraisals. Link is in the description or go to highwestlending.com. And if you want to pressure test your deal before you call, run them through Deal Strike. It'll surface the weak points, confirm the exit logic, and help you come to the table with a submission that moves fast. Link for that is below too. And if this was useful, hit subscribe. I post every week hard money, deal analysis, real world lending in the Western US. No hype, just years of experience. I'll see you on the next one.